Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin, and we're going to be looking at, realistically speaking, based on historical data, what month would we expect to dip back down to the Bitcoin bull market support band. So if you guys like the content, please subscribe to the channel, give the video a thumbs up. Also check out the Telegram channel, which you can find a link to in the description below. So we've talked about our Bitcoin bull market support band plenty of times in the past, right? Because of its support, historically speaking, during a bull market. But generally, what I also want to do in this video is look at monthly candles to try to get an idea of when we would expect to revisit this bull market support band, because right now the price is still significantly above it. If we were to take a measured move from the 20-week moving average, we're about 40% above it, and from the 21-week EMA, we are about 34% above it. So the bull market support band just simply consists of the 20-week SMA and the 21-week EMA. So this is going to be a bit of a grueling video in the sense that it's not going to be, in my opinion, entertaining in any way. But again, I'm not here to entertain. I'm here to show trends. So let's go ahead and jump in. These are monthly candles, okay? And it still shows the Bitcoin bull market support band on the weekly time frame. So this is these green and red lines that you see here. Okay, so this is still the 20-week SMA and the 21-week EMA, and then these are monthly candles. Now what we're going to do is we're just going to walk through time and see how often we actually get above this level and how long we can sustain it. And we're going to count, okay? And if it's within, say, 1% or something, I think we're just going to say, okay, it revisited the support band. But if it's any higher than, like a percentage, we'll go ahead and say, okay, we're above it. So in this situation, we just started off and we had two candles slightly above with wicks almost down to the bull market support band. Third candle touched it. Okay, the third candle touched it. Then we had two more above it, and then the third candle touched down to the bull market support band. This next candle touched it, two candles above, and then this one came back down to it. Okay, so far we've only ever seen 2 months where we are realistically above it before having a candle that goes back down to the support band. And then we don't care about this because this is all, this is where the bull market breaks down. And then we come forward and see, okay, well, we sort of left it here, but we still had a wick down, so it doesn't count. Wick down, it doesn't count. We had one that left it, and then the next one returned, right? This one was on it. You could say this one left it, and then this one returned. This one's on the support band, a wick to the support band. So all we really care about are we getting down to the support band or not, in terms of, realistically hoping to buy a dip, if you will. Again, all the way back down. All of these touch the support band. This one didn't, but the next one did. This one did, and then this one did. This one didn't, but again, the next one did. I get this is not entertaining, but let's just get through this because I want to show that we don't typically spend more than a couple months completely above it. And then we broke down below. And then all these were either on it or below it, and we don't care about that because we're not in a bull market. And then here we broke above it and had two candles above it, even with the wicks, and then the third one came back down to it. These were all on top of it. We had one that left it, this one was above it too, and then the third one came back down. Moving forward, we had two that were above it, and then the third one had a wick down. One above it, wick down. These were right on top of it. One that left it, and then wicked back down. And then here in August of 2017, all the way on it. This one had a wick down to it as well. Still on top of it in October of 2017. November of 2017, you could argue we barely left it if you want to give it that, and then say we had two above it, but then the third one came back down to it. And then we had another bear market. And then we finally get going again, but we're still touching it every single month, the bull market support band. And note that this is not just the 20-week estimate, right? Because if it were the 20-week estimate, this one would already be 12 or 13% above it. But it's still touching the 21-week EMA. So it's a band, and in this situation, that band spanned from approximately, $4,600 all the way up to 5,500. So the band's pretty large. So when we talk about it, don't just think of the 20-week SMA, which is what we normally talk about. We're talking about the entire band, which spans from the 20-week SMA to the 21-week EMA. We finally left it here. We had two candles above it completely, and then this was the first time that I've been able to find, that I've seen, where we had a third candle that still on the monthly time frame did not touch this band. Okay, so this was the first time in history that we had three candles in a row that did not touch the 21-week estimate, or the 21-week EMA, or the 20-week SMA. And then you continue on. We were below it, below it, below it. These are touching the band here. We get above it, come back down, and we touch the band on the next one. Above it, touch the band on the next one. Finally, here, if you want to argue that this one is above it, because technically it is, we had 1, 2. If history is any indication, then the probability that the next month gets to this band is pretty high, right? If history is any indication. And so the only time, again, in history where it would have been this move, where we had two monthly candles that still had not touched the bull market support band. But again, historically speaking, this would, maybe not this candle, right? If we can maintain the bullishness for a few more weeks, then this candle might not come down to this region. However, the next candle we would assume would get to it in terms of, a high probability. And if it doesn't get down to it in January, then history would have never shown a period where even by February it still did not get down to it, at least with a wick. Now, one of the things we have to be careful about is the fact that these are only showing monthly closes. Because if for instance, this is showing the December, so this would be the November close, December open, where the 20-week is at 12.8 and the 21-week EMA is at 13.5. We actually know that since the first week, we've increased, right? The 21-week EMA for Bitcoin has gone up to 14K, and the 20-week SMA has gone up to around 13.3K. You can see that here. But these go with weekly closes. The issue here is that they go with monthly closes. And if we keep increasing at the rate we have been, then by the open of January, so by the end of December, we would expect the 20-week SMA, if it's 13.3 now and it's gaining about maybe $400 per week, and let's say we have another 3 weeks, that's another $1,200. So by the time we get to the end of December, early January, we there's a good chance we'll be 14.5K, and then the 21-week EMA could be a lot higher. I don't know exactly where it would be. I haven't done the math. It's a weighted moving average, not just a simple moving average. So it's a lot harder to do that in your head. But you can see from say November to December, it increased from 12.8 up to 13.5, and it's already at 14K. We already know it's at 14K. By the end of the month, it could be at 15 to 16K. And if we're still above it, then that would signify that, okay, well, we have not come back down to it yet. However, in the next month, historically speaking, almost every single time in history, we would have come back down to at least touch the 20-week or the 21-week moving average, the 20-week SMA or the 21-week EMA. So historically speaking, there would have only been one time in history where we wouldn't have, and that would have been here in 2019, where we had 3 in a row that did not touch this band. And then the fourth one, of course, dumped down below it. So we're going to keep an eye on this, of course. If, by the time we get to the December close, the 20-week SMA is, it's right now it's at 12.8 on the monthly time frame, but on the weekly time frame it's at 13.3. By the end of the month, if we're assuming it's going to be at 14.5, it might be somewhere in that ballpark right there. And then the 21-week EMA, could be way up here or something. So if we don't hit it now, which would mean coming all the way back down to these levels, which again is not really doing these average moving averages justice because we're looking at monthly closes, not the weekly ones. But I just wanted to show a macro trend. So for us to get to it this month, it would need to come down to between 12.8 and 13.3. For us to get to it, say in January, it just simply means going down to maybe 14.5 to 16K or somewhere in that ballpark. And then if we still don't get to it in January, then it probably means, I mean, the probability of it happening in February, I feel like would just be astronomically high, at least a kiss of off the moving average, right? And by that point, we would expect these to be even higher if Bitcoin is still maintaining these bullish levels. Maybe the 20 week would be at, by that point, maybe the 20 week would be at 16K and the 21 week, could be at 17 or, maybe 18K. I mean, it all depends on the price action, right? It's hard to extrapolate so far into the future when we know that these prices coming up over the next 8 weeks, which would dictate where this goes, would be weighted heavier than the prior week. So it makes it rather difficult to predict where it would be. But the idea that we would just continue on up and never come back down and test it, yes, it's possible. However, historically, it would be essentially unprecedented because the only time we had 3 candles in a row was here, and before that, we had only ever had 2 candles in a row. So I just want people to be cognizant of this fact, right? That it's nice to be bullish and all, and I wouldn't want to be on the wrong side of Bitcoin in a bull market, but again, historically speaking, we will revisit it at some point, even if it's just a wick, and the probability that it happens in the next 2 months is fairly high. Now, you might look at it and say, okay, well, does that mean, again, we have to go back down to 13.3, where the 20-week moving average is now, or 14K, where the 21-week EMA is now? No, it does not mean we have to go there, because if it happens next month, those levels will be higher. And if it happens the month after that, those levels will be higher. However, those levels will still likely be less than 20K when we eventually test them as support again. Again, this is a lot of speculation on my part. It's a pretty boring and dry video, so most people at this point have probably tuned out. But again, I think these videos can be useful in keeping a level head on the market. Now, if we are able to see, a monthly candle up here and at least part of, say, January up here, then I do think this could help pave the way for a temporary altcoin season. But if we just come straight back down, then the altcoin season is going to be put on hold, and for the foreseeable future. So hopefully this has been interesting to someone, at least 5 of you out there. If you guys like the content, please subscribe to the channel, give the video a thumbs up. We also do have the premium list. You can check that out in the description below. We have the Black Friday sale going on for about 1 or 2 more days. Make sure you check it out. You get access to the weekly reports, the weekly videos, the risk dashboard, the premium Telegram alerts channel, the Telegram chat room, and the trading view indicators. So you get access to a lot of stuff. Make sure you sign up in the next 1 to 2 days to lock in the lower price. That'll wrap it up. Please subscribe to the channel, and I'll see you next time. Bye.